Hello ladies and gentlemen, and welcome to part 7 of our trading plan series. Today I want to talk about a very important topic. It's about risk and money management, and I will show you a list. Maybe the list is not complete, but at least we will have a look at the most important points of risk and money management. So, well, here we go. Most professional traders will tell you that risk and money management is the most important part of the whole trading process, of the whole trading plan document. So please let's have a look into each point here. It should give you an idea about what's important. Read more about risk and money management. It sounds very boring on the beginning, but it's very important. Believe me. So first of all, the question: how much is your trading capital? Are you going to start with 5,000? Are you going to start with 100,000? Do you have 20,000 for trading? So, well, that's important to know, of course, because it will also define the way your trading strategy has to go. With a $5,000 trading capital, you might not go into futures. With 20,000 you might go into futures, but not into position trading of futures, and so on. So first of all, well, the question is, how much money do you have for your trading? The second important point here is, well, how much of your total capital are you willing to lose? I know when you start trading, you do not want to think about losing. It makes most of us uncomfortable. It sounds like negative thinking, but it's really not. Really come up with the idea and say, okay, I'm going to start with 20,000, and when my capital goes down to 10,000 to 15,000, whatever your number is where you feel comfortable, then I will stop with trading. I will get help from outside. I will investigate what went wrong, and so on. So really come up with a number where you say, okay, until here everything is fine, but when I'm falling below a certain amount of money, I'm going to stop with my trading. Then we go a little bit more into detail of every single trade, with trying to answer the question, how much will you risk on every trade? Of course, the best would be a very low percentage number. 1% would be great. But of course, it depends very much on your trading capital, and it also depends on the way or the markets you're going to trade. When you start with a $100,000 account and you go into future and you're trading 1%, you will do fine because you will find good trades. But when you go lower with your trading capital, let's say 20,000, and you just want to risk 1%, $200, that's gonna be very difficult. So it depends on the way you're going to trade, the markets you're going to trade, and of course the trading capital. But as already mentioned, as lower your percentage number, it is better. Also, how much will you risk in total? Let's say you are in a couple of positions and you are risking 3% on every single trade. So how much position will you allow to enter? 2, 3, 5. So define the total risk of your trades. When will you stop trading? Well, it's also important. When I day trade, for example, when I see I have more than 2 losing trades, then there is probably something wrong. I'm not in sync with the markets. The markets move differently as I want them to move, and so on. There might be a lot of different reasons. So think about when you will stop trading. Also think about what you are going to do when you have a large drawdown. Well, losing money is something a trader has to be used to it, but what's going to happen when you have drawdowns for 3, 4, 5 days, and from your $20,000 account already $2,000 or $3,000 are gone? Will you stop trading? Will you go on a break for a couple of days? What are you going to do? But in the same way also, what are you going to do when you have excellent profits? So will you stop trading after some percentage of profits? Will you well, also go maybe on vacation for a couple of days? So think about it and write it down, what you're going to do in such cases. Think also about the outside risk, risk of holding a position over the weekend, what can happen regarding the economy, the news, but also think about the risk on reports and so on. So do not only focus on the risk you can really calculate, also try to think about the risk that might come from outside that you are not always aware. Last but not least, what is your position sizing strategy? Well, there are a couple of strategies. As I already mentioned and recommended, try to dig a little bit deeper into risk and money management. My strategy is I'm always using the same percentage of my total trading capital on every single trade. Another strategy might be to say, okay, I'm always using the same amount of money on every single trade. The difference is when my trading capital goes up, I'm risking more because the percentage stays the same, but the amount goes up with the capital. When the trading capital goes down, I'm also reducing the amount in US dollars. So try to find something that fits best to your trading style and then also to your personality. But risk and money management doesn't have to be difficult. Honestly, mine is very basic, very simple, but it's well defined, and I stick to it all the time. So hopefully you are really going into risk and money management a little bit more deeper. Try to get information on the internet, buy a book or two, and yeah, try to dig a little bit deeper regarding this subject. Have a great trading week, everyone, and talk to you soon. Bye bye, everyone.